Good afternoon, everybody. It's Jed Jilling with eXp Realty here with another Southern Oregon market update. Today is Monday, April 3rd, and we'll roll right into the statistics. So currently between Jackson and Josephine counties, we have 801 active single-family residences on the market. We are up from last year, 14.5% from this time last year. We had 684 this time last year. So we're up, but we have been seeing this number decline the last couple weeks, not by very much, but by a little, which is interesting because if we follow last year's data, this number was gradually going up at this time. But there's reasons as to why, and probably one of those is a lot of people are locked in at lower mortgage rates from the last few years and don't want to move. The new listings from last week, we had 94 new listings. 98 listings went pending, 76 closed, and 43 off the market due to expired or canceled listing contracts. You'll notice that the 43 is a little bit larger number than we normally have on the week because it was the last week of the month, and a lot of agents will set their listings to expire at the end of a month. So we had a few more expireds than we normally would in the average week. Comparing these numbers to the 4-week average, for the new count, we are up 4 3/4 units for the week. We were up 14 on the pending count, and we were up 11 1/4 on the closed count. And comparing these numbers to the same week last year, we're down 38.5% on the new listing count. We're down 23% on the pending listing count, and we are down 45% on the closed listing count. Overall, a pretty good looking week. We had definitely a strong amount of pending. Of course, 14 above the 4-week average, and everything was above the 4-week average really, which is good. Where it should be at this time of the year, we should be picking up speed, which everything seems to point in that direction that we are. Especially when May and June get here, we should really see these numbers start to pick up. Out of the 94 new listings last week, 8 of those are already pending. That represents 8.5% of those new listings that went on the market. So going back to our active count, 801, we are actually, if we take that and we take our close count, that gives us our single week snapshot of inventory, which we are at 2.43 months on right now. So we haven't seen it that low yet this year. And if we take our 4-week average and do our inventory calculation there, we are at 2 3/4 months. So we are at very low amounts of inventory for what we're dealing with in this market right now. It's kind of funny because our inventory would indicate that we are in a hard seller's market. And in certain price ranges, we certainly are seeing that. Still seeing multiple offers, or we're starting to see multiple offers come back in. Some places go over asking, but in some of the higher end and higher priced listings, they're not moving nearly as fast. But it's really a mixed market, and the wild card, of course, are the mortgage rates. And getting into those right now, on a 30-year fixed conventional mortgage rate, the national average today is 6.44%. The national average on an FHA 30-year fix today is 5.91%. We saw these numbers start to trend downward as of last Wednesday, and they've been trending downward since. Hopefully we see that maintain. It'd be great to see mortgage rates get down into the low to mid 5s. I think that would really create a lot more activity as it is. Mortgage purchase applications were up 2% week over week, and refi mortgage applications were up almost 5% week over week. So like I said, that's the lowest inventory we've seen yet this year. We'll continue to monitor that as always. Next week, we'll have the March stats. They'll be posted, I'm sure, later on this week. So we'll get those to you. I'm not sure when we're going to see our CPI numbers come out for the month of March. I haven't looked into that yet. And then, of course, we're at the end of the first quarter. So I don't believe that we'll find out our GDP here for a while. I think it's going to be at least a few weeks before we find out what the first quarter GDP was for the economy. But that's all I've got for you guys this week. And everyone have a good rest of the week. Stay dry. We'll talk to you next week.